Here are the key takeaways from Union Budget 2026. Total government expenditure has been set at 53.47 lakh crore rupees. Capital expenditure rises to 12.22 lakh crore rupees, up 8% year-on-year, while effective capex reaches 17.15 lakh crore rupees. The government expects around 10% nominal GDP growth in FY27. Defense sees a strong boost this year. The total defense allocation stands at 7.85 lakh crore rupees. Defense capital spending grows by 17 to 21%, with modernization up 24%, making this budget clearly positive for defense stocks. On fiscal discipline, the government stays on track. The fiscal deficit is 4.4% for FY26 and 4.3% for FY27. Gross borrowing for FY27 is estimated at 17.2 lakh crore rupees, with net borrowing at 11.7 lakh crore rupees. For markets, STT on futures increases from 0.0 to 0.05%, and on options from 0.10 to 0.15%. There is no change in short-term or long-term capital gains taxes, while buybacks will now be taxed as capital gains. On personal taxes, slabs remain unchanged. The standard deduction stays at 75,000 rupees, and incomes up to 12 lakh rupees remain tax-free under the 87 rebate. A new Income Tax Act will come into force from 1st April 2026. Growth remains the central theme. The budget announces 7 high-speed rail corridors, 20 new national waterways, a 10,000 crore rupees SME growth fund, 10,000 crore rupees for Biopharma Shakti, and 20,000 crore rupees for carbon capture over 5 years. Capital flows get a boost as the PROI equity limit doubles to 10% and the aggregate limit rises to 24%. FEMA reforms and total return swaps for corporate bonds are also on the agenda, along with incentives for large municipal bond issuances. In summary, 12.2 lakh crore rupees capex, 7.85 lakh crore rupees defense spending, and a fiscal deficit at 4.3%. Union Budget 2026 is a numbers-driven, capex-led growth budget. Rudra hai to mudra hai. Visit www.rudrashares.com for more. Disclaimer: Stock market investments are subject to market risk. Read all scheme-related documents carefully.